Welcome back, you lovely people. As Bitcoin continues her recovery, bouncing off of our support around 28 to 30,000, we're now above further resistance, which is now support over 33, heading over 34,000. Everything looking good. We're now starting to think about crossing the most important trend line in crypto and then crossing the all-time high into our cycle peak. So we are starting to prepare for the cycle peak. And this video is going to continue on from our comparison of the cycle peak models, which we've been looking at. If you haven't caught them so far, head to the channel, head to playlists, and they are in the explainers folder. It's the Bitcoin model comparisons. And there's an extra element that I want to add in today in order to continue to create a full picture that we can then use for our decision making. And what this is going to lead on to next, in the next video, I'm going to talk about how we potentially flip between strategies if we need to. And then after that, and as price is recovering past the important trend line and the all-time high, we can put some final predictions on the cycle peak and the timing of that and the price. So that's where we're heading. We are building towards that. But what I want to talk about today is Bitcoin blocks. So what do I mean by that? Well, just looking at this chart from Charts BTC, we have our halving. Now, you've seen a lot of charts in the past, such as the halving tracker, for example. On the bottom axis, we often talk about the days from the halving or to the halving or from the all-time high, which of course is a good way to measure and has served us well so far. But the core foundation of Bitcoin is the Bitcoin transactions and the creation of blocks. The halving doesn't take place every 4 years. It takes place every 210,000 blocks. So what we want to see is whether the block count, as you see on the bottom axis here, is going to impact our cycle peak, or whether the market is looking more at the days from the halving. And we don't know the answer to that until it actually happens, but we can get that data and make sure that we have a plan in place. Looking at what happened in previous cycles. So the blue line is the first halving from 2012, the cycle peak in 2013, and the halving took place after block 210,000, and then peaked approximately, I'm looking at where these lines are, the peak was approximately 60,000 blocks after the halving. Now compare that to the last cycle, which is in the red. The halving was in 2016, and the cycle peak took place in 2017. But in terms of blocks, it took place approximately 80,000 blocks after the halving, because it's just past the halfway point of this square. The halfway point is about 77,000. So I'm going to round it up and say about 80,000 blocks after the halving. So what can we take from that? Well, firstly, if we look at the white line, which is this cycle, now this hasn't been updated for a month, so we would now be slightly below the red line. But in terms of the pattern, we have been closely following the red line. And therefore, we need to assume that there is a possibility that we're going to follow the last cycle very closely up to the peak. That is essentially the foundation of the Bitcoin playbook and the models that we've been following. So we're going to keep that as our baseline. However, we do need to be aware that the last cycle peaked after 80,000 blocks, and the one before that was 60,000 blocks. So that's a difference of 20,000 blocks. 20,000 divided by 60,000 is 1/3. So the last cycle was about 33% longer than the cycle before when measured in blocks. So we also need to bear in mind that this cycle could be approximately 33% longer than the previous cycle. So if the cycle peak was 80,000 blocks after the halving, then 33% on top of that is approximately 107,000 blocks, which would put us just past this white line here. So I'm imagining as we come out of this mid-cycle shakeout, we're probably around here by now anyway, because this chart hasn't been updated for a month. So we start coming up from below the red line, and then we peak somewhere around just after this white line. We're not going to try and estimate the price at this point, so whether it's higher or lower, we're not sure. But this essentially is another version of a lengthening cycles model, but we're using block count to get there. So the block count would be on block approximately 107,000, where our cycle peak would take place approximately here. Hopefully that makes sense. Now let's figure out how we put that into practice. I've got some tabs up here. Just a few interesting things to note on block counts. Why am I talking about block counts? Why is it really important? Well, if you can see from the Bitcoin.com block explorer, this is what Bitcoin is. These transactions, latest transactions, are going through the Bitcoin network. They are being pulled together, and approximately every 10 minutes, all of the transactions that are being verified create the next block. You can see it's not always, it's 10 minutes on average. If we look at the latest blocks here, we have one 36 minutes ago, 18, 17, 13, a minute. So they average out to approximately every 10 minutes. This is what is going on behind the scenes. And here's a very nice article which I'll share, which is the Bitcoin supply explained. But I just wanted to get the math because I'm lazy. On average, the block time is every 10 minutes. That's about 6 blocks per hour. And this is what I care about, 144 blocks every day. So I'm doing the math on that, and I've already written it down to make it easier. If we're averaging 144 blocks per day, and we think that this cycle could be somewhere between 80,000, the block 80,000 after the halving, and block 107,000 after the halving. If we do the maths on that and add it to our charts, add it to the models that we're following. So I'm going to start with our baseline model, which is the one we've been following. This is based on the halving, and it's based on the fact that we expect this cycle to be approximately the same length as the last cycle, because that is what the data is currently showing us. Quick note on our two scenarios: we had a final capitulation or a recovery up into the launchpad zone. We'll talk about that in a second. It looks like we're following scenario 2, but we remain open until we head back up past the most important trend line in crypto, which is currently coming in around 42,000. Now, if you remember, we've already done the calculations on our possible cycle peak, and we created a range of the 19th of October to the 21st of November. Now, I just want to use the maths that we have just done to make that a bit more accurate. So under this model, we're saying that the cycle peak could be approximately 80,000 blocks from the halving. Here is our halving in mid-May, and 80,000 blocks divided by 144 blocks per day gives us 555 days from the halving. If we measure that out from the halving, 555 days takes us to the 15th of November, which is very good because this deadline that we put in was kind of arbitrary. We said we wanted to give it a month from our target. Our target is the 19th of October. And now I believe what we've done here by adding in the block count is given us a firmer deadline. We had it in as the 21st of November. This is showing us the 15th of November. So I'm going to move us, my mouse will work, to the 15th of November. Here we go. So now within the green line and the red line, we have our range for our potential cycle peak. This is what we're going to be using for our final targets, which will be done over the next couple of weeks, depending on the price action. I also want to have a look at the KS model. Again, if you are not aware of it, then head back and watch the previous two videos where we explain it, hopefully very well. And the KS model is the lengthening cycles model. And remember what we calculated, if we just remind ourselves here, if we have lengthening cycles, that's about 33% longer in terms of blocks than the last cycle. That takes us to block 107,000, and 107,000 divided by 144 blocks per day equals approximately, or exactly, 743 days after the halving. Let's calculate that. 743 from the halving takes us to the 25th of May, and we already had in a target of about the 20th of May. So that's just really nice convergence of our data, or confluence of our data. They both work, I guess. So we don't need to do anything now. We have a very clearly defined target. If we are having a lengthening cycles, if it ends up looking like the KS model, we're looking at the 25th of May. So just a reminder before we close out, our baseline model, the one that's covered in the Bitcoin playbook, the one that has served us perfectly well up to this point, is the halving model, and is saying that this cycle is going to look very much like the last cycle. This is definitely our baseline. This gives us a target of between the 19th of October and the 15th of November, so approximately 1 month. And we also have our launchpad zone. How we came up with this was looking at the parabolic phase for the last cycle and the cycle before. In the last cycle, it was approximately 3 months. So 3 months back from our target of the 15th of November takes us, I have to update this slightly based on our new work, takes us to the 15th of August, like that. And in 2013, the parabolic phase was 1 month. So that takes us back from the 19th of October to mid-September, which is in our launchpad zone. So if we are following the Bitcoin playbook, if we're going to continue on the successful path we've been on so far, what we are expecting is for us to be in our launchpad zone by between the middle of August and the middle of October. We came up with the prices based on the price action from the previous 2 cycles. I will link that video as well if you haven't seen it. That's how we came up with this zone. We have nice early signal that we are certainly going in the right direction. If you look at our last 2, these are 3-day candles. You know, we are heading in that direction. Very positive, but of course, let's wait and see. And our KS model is based on the work by Ken. And I'll link to his channel again in the description. And for that, we have a final cycle peak target of the 25th of May. Now, his price target is much higher, so don't be concerned about potentially having to wait till mid-May. His price target is about $500,000. And what I'm going to be doing in the next video, because we also have lengthening cycles and diminishing returns model, I'm going to be talking about our potential price action over the next couple of months. And I'm going to talk about the scenarios that we need to keep in mind because if we don't come up into our launchpad zone, then we may be following one of the other two models, and we need to figure out how we identify that quickly and what changes we might need to make to our strategy. And of course, even if we come into our launchpad zone, we may still be following one of the other two models. So at what point does each one become invalidated, and how do we flip between them? And that's where the lengthening cycles and diminishing returns will come in, of course, because if we, for example, if we come sort of sideways and we head past the mid-November, which is our deadline for our baseline model, well, then we have to start saying that, of course, that is out of the question. We're not heading up to 100, 200, 300,000 by mid-November. And therefore, are we flipping to the KS model? And at what point does the KS model be invalidated? And are we looking at lengthening cycles, diminishing returns, where roughly their targets are $100,000 by the end of next year? So we're aware that all three are in play. We have a clear bias towards the model that we've been tracking since the halving and has been working so far. And in my opinion, the data is showing us that that is the most likely, but we want to be very, very agile and make sure that we're not being too dogmatic and that we remain on the right side so that we can make the right decisions. I hope all that was useful. I believe that was a very, very important summary and adding in the view of the blocks, which we will continue to track because blocks can speed up and slow down depending on the network. And we will continue this work over the next couple of weeks as we head into a really, really exciting phase of the journey. So thank you for supporting. Please share this video and I'll talk to you soon.